When an offer hits your inbox as a seller, what's the first thing most people do? They scroll straight to the price. And that makes sense. Price is bold, it jumps off the page and it feels like the headline. And let's face it, everyone wants to see their bottom line. But in real estate throughout Maryland, Pennsylvania, and Delaware, the best offer is almost never just about the number. Don't get me wrong, we love a strong price, but an offer is so much more. When looking at an offer, we have to look at the whole picture. It's inspections, it's financing, and it's how it relates to price. It's appraisal exposure, it's timelines, it's flexibility when needed, and yes, it's price. And if you focus only on the price, you can accidentally choose the offer that looks the best, but carries the most risk. So when we evaluate offers, we look at them in three major buckets. Let's start with inspections. Inspections, where deals start to shift. Inspections are one of the biggest turning points in any real estate transaction. Is the buyer doing a general home inspection? Are they also adding radon? Termite? How about well and septic, especially in more rural areas? And these two are almost always done by every single buyer and carry a pretty heavy price tag for a seller if repairs are needed. Did you know in some jurisdictions, there's a pre-agreed upon dollar amount negotiated into an offer between buyer and seller, forcing a seller to make a repair if either of these systems are found to have an issue? How about a mold test or a chimney inspection? Every inspection contingency is a doorway to renegotiation. Now, that doesn't mean inspections are bad. They are normal. They are healthy and they protect buyers. But how they're structured matters. Are they asking for the right to renegotiate anything and everything? Or are they limiting repair requests to structural, safety, or environmental issues? This is what many contracts already call for, but let's face it, buyers sometimes have a mind of their own when it comes to what items they want to ask for to be repaired or replaced. Some buyers will include language saying they will not request repairs under a certain dollar amount. While some will conduct inspections for informational purposes only, that is a huge difference in risk. Because the more open-ended the inspection contingency is, the more opportunity there is for friction. And friction is what derails deals. A $500,000 offer that gives the buyer freedom to renegotiate after inspections can quickly turn into a very different contract 2 weeks later. And believe me, we see this all the time. So when we're reviewing offers, we're asking, how much control does the buyer have after inspections? That question matters more than most sellers realize. All right, number 2, financing and appraisals. The math has to work. Just because someone offers $500,000 doesn't mean the bank agrees. If the buyer is financing the home, the lender will require an appraisal, and the appraiser bases value on comparable sales, not on emotion or competition. If your home is listed at $450,000 and the highest offer comes in at $500,000, but the appraiser comes in at $460,000, the bank's lending is based on $460,000. Now there's a gap to deal with, and it's a pretty big one, $40,000. So the critical question becomes, does the buyer have the cash to cover the difference? Did they offer to cover the difference up front before the contract was even signed? These conversations matter. Beyond the appraisal, we look closely at down payment size. A buyer putting 20 to 25% down usually has more flexibility. If the appraisal is short, they may be able to bridge that gap. A buyer putting 3 to 5% down may not have that cushion. These questions should be asked and answered up front, especially if you are dealing with a multiple offer situation. Then we consider loan types. Is it cash, which is the cleanest structure? Is it conventional financing, FHA, VA? Certain loan programs have stricter property condition requirements, so peeling paint, missing handrails, roof concerns, and safety issues. Those can become mandatory repairs before closing. None of these loan types are bad, but they carry different levels of structure and risk. So again, we ask, is the offer strong on paper or strong in reality? Because the highest price with the weakest financing can be the most fragile offer in the pile. Number 3, let's look at timeline and flexibility. Does the offer actually work for you? When does the seller want to close? Do you want to close in 21 days, 30, 45, or 60 days? And does that line up with your next move? Maybe you're buying a home in another state and you need a little overlap. Maybe you need a rent back to stay in the home for 30 days after settlement. Not every buyer can accommodate this, but the right buyer can remove enormous stress simply by being flexible. We also look at some other terms. Does the buyer have a home to sell? If they do, where are they in the selling process? Is their buyer ready to go to closing? Or have they not even put the home on the market yet? Are they willing to take your home as it stands or as is? Meaning, if the home needs cosmetic updates, are they comfortable with that? Or if they are remaining contents in the property, are they willing to accept it as is and as it stands with the contents of the home being left inside at closing? Every one of these details reduces the chance of last-minute stress. And when you combine inspection structure, financing strength, and timeline alignment, that's how you measure the true quality of an offer. In helping hundreds of families sell their home, I have found that oftentimes lower stress is worth more than a few more dollars at closing. Now let's bring it all together. Whether you're in Maryland, Pennsylvania, or Delaware, we're not just negotiating price, we're engineering certainty. A $480,000 offer with strong financing, clean inspection terms, and a timeline that works for your life may be far more valuable than a $500,000 offer loaded with contingencies and risk. So if you're selling, don't just ask how high is the price. Ask how strong is the structure. That's how you bulletproof a transaction, and that's how you protect your equity. Hey, thanks so much for watching this video. Please take a second, like and subscribe to our channel. And if you're interested in more tips and tricks, check out this next video.